Is the BellRing Brands rocket ship still intact, or is there some trouble ahead for the functional CPG brand portfolio? As I normally do with my quarterly financial content of publicly traded functional CPG companies, I will be using the recently filed earnings report, earnings conference call, and any associated public news. In this case, it's BellRing Brands fiscal 2022 quarter one as the backdrop to discuss what it could mean to the overall active nutrition market in the liquids, powders, and bars format. As a reminder, this is for the fiscal quarter that just end December 31st, 2021. That means it doesn't include the normal kind of consumption increases from the New Year's resolution consumer cohort that will likely show up in the next fiscal quarter. That being said, let's kind of run down some of the high level revenue numbers. Net sales for fiscal year 2022 quarter one were $306.5 million. That was up 8.5% year over year, but down 9.9% quarter over quarter. Let's look at the sales by brand. Premier Protein net sales were up 4.5% this quarter, though the volumes were down 5.6%. And I'll kind of touch on maybe what exactly is happening later in this content. The protein RTDs, which make up the vast majority of Premier Protein, those were up 4.5%, but the associated volumes were down 6.2%. Now, in Dymatize Nutrition, those net sales were up 40.6% and volumes were up 8.1%. And then some of the other brands, mostly Powerbar at this point, those net sales were up 3.2%. Now, sales by brand, just kind of the makeup here. I mentioned earlier, Premier Protein is the biggest contributor to BellRing Brands at 82%. Dymatize makes up 14%. That was up 1 percentage point since the last report. And then the other brands kind of make up 4%. And now sales by product, again, kind of mentioning that protein RTDs make up the vast majority of BellRing Brands. That's 81%. Powders make up 15%. That was up 1 percentage point since the last report again, and directly related to the growth in the Dymatize brand. And then nutritional bars and kind of other categories make up 4%. Sales by channel, you have club that makes up 53%, food, drug, mass that makes up 26%, e-commerce makes up 12%, specialty makes up 8%, and then all other channels make up 1%. Now, sales by territory, BellRing Brands is still a predominantly US-based sales company. At 88% comes from the US. International is 12% of their total revenue. Now, I want to shift this content into kind of two deep dives. The first one is how I kind of always start, is around the Premier Protein RTD shakes, but I will kind of move over to Dymatize's protein powders. But overall, the RTD liquids category of convenient nutrition has shown extremely strong growth during the pandemic era compared to historical rates. This has really kind of given Premier Protein a strong wave to ride, and the brand continues to see strong growth across all of its major tracked channels over the last 13 weeks. That's including grocery, that's up 4.3%, mass, that's up 15.5%, club, that's up 6.4%, and then the drug or pharmacy channel, which is up 31.2%. Digital sales are also growing strong at Premier Protein with those protein drinks. E-commerce grew close to 25% this quarter. This is a decelerating growth rate compared to a 34.6% over the last 52 weeks, but that's mostly related to more like shopping activity happening in store during the latter part of the pandemic era as consumers adapt to this new environment. Now, consumption trends on the protein RTDs. Premier Protein did see quarterly consumption gains of 10% year over year. And while shipments were much lower than normal, they did outpace the consumption this quarter, which is good news. That's why you're seeing some of these out of stock issues decline a bit. And as a direct result, the total distribution points did rebound a bit, though is still below the recent all-time highs. Household penetration for the entire Premier Protein brand is at 8.2%, which is another increase year over year. And it's getting close to that kind of like 10, 11, 12% resistance level that you do see some of the major brands like Kind has reached in the convenient nutrition category. The brand continues to have strong upside as the RTD liquids category of convenient nutrition household penetration is only at 25.8% compared to about double that on the convenient nutrition category overall. Premier Protein's market share did slide below its moving average, reaching 17% of the total RTD liquids category of convenient nutrition. This slippage is primarily related to the total distribution points loss from the out of stock issues, but is also partially from increased competition in the ready to drink protein shake category. Now, I want to shift over to Dymatize Nutrition's protein powders. And up until the strategic shift a few years ago, Dymatize was the typical kind of sports or active nutrition legacy brand that had become really like lost in the market. They continue to kind of focus on the specialty channel, which has been retracting. They continue to kind of carry a bloated product portfolio that was built for this historical sports nutrition consumer cohort that really had been retracting as well. But 2020 was the year of change for the world, and Dymatize embraced that and is now benefiting from that evolution. The brand has seen huge consumption gains across all sales channels over the last 13 and 52 weeks, most notably being in mass channel, which they were up 164.4% over the last 13 weeks and 376.7% over the last 52 weeks. Club was up 46.9% over the last 13 weeks and 63.8 over the last 52 weeks. And then grocery was up 35.6% over the last 13 weeks and 55.6% over the last 52 weeks. This equates to an overall track channel consumption growth in Q1 of 48% year over year. Powders are becoming more mainstream and more consumers are picking up performance nutrition ones at grocery stores and mass retailers, which is why total distribution points and the all commodity value percentage are close to recent all time highs, even as the supply chain struggles happen with Dymatize Nutrition. Additionally, Dymatize has done a good job at growing its e-commerce channel to 47.2% growth over the last 13 weeks and 57.7% over the last 52 weeks. The company is also benefiting from the licensing partnerships it's made with Pebbles, which Post Holdings owns, and then also Dunkin'. For the last part of this content, I do want to kind of run through again and update you on why this billion-dollar functional CPG portfolio is still growing so fast and why maybe BellRing Brands isn't growing as fast as it could. Four reasons why you're seeing this growth. The first one is mentioned above, but the RTD liquids category of convenient nutrition has really seen quarterly and like last 52-week growth rates that are really like 3 times the historical average of 5 to 6% compounded annual growth rate. Secondly, shoppers that are looking to consume more nutritious products and improve their overall health. This is really like a long-term secular trend that has been aided by the COVID-19 effect. And then thirdly, you also had pricing adjustments that showed Premier Protein and Dymatize had a relatively inelastic behavior based on short-term market data. And then fourthly, kind of finally, the vast improvement in the Dymatize business that's being helped by the ready-to-mix powder slowly becoming mainstream. But on the flip side, like why isn't BellRing Brands growing even faster? So let's just talk about profitability first a little bit here, since that does usually play a key role in having the ability to invest further into sales growth, though this isn't actually like a core problem that's happening at BellRing Brands right now. Gross profit margin was 30.1% of total net sales, which was down 240 basis points year over year, but did improve sequentially 190 basis points quarter over quarter. The lower gross profit margin was driven by the anticipated higher milk-based protein costs for the RTD shakes and the ready-to-mix powders and increased freight costs. There has been like a 2 to 3x cost increase in proteins versus a year ago that will continue to look pretty bad for the first half of 2022, probably throughout 2022, to be honest. The company believes that the long-term inflationary costs on whey protein costs are transitory. Now, I tend to agree long-term, but I do think we really won't ever get back to pre-pandemic levels on those costs, and those substantially lowered costs won't really hit until at least 2023. As I mentioned in the last quarterly content, I did think that BellRing Brands needed to institute another pricing increase in fiscal 2022, and the company did announce that in this quarterly update. Now, you also have capacity constraints, but the good news is that Premier Protein is making significantly more shakes every quarter, and has a healthy network of co manufacturers right now. Premier Protein has faced capacity challenges before, and it thrived on the other side of those. Remember, kind of the end of 2018 into early 2019. But back then, it really forced the company to cut back on the product portfolio and really only have two flavors available and slow the promotional activity with key customers. This time, Premier Protein will again kind of reduce its promotional activity, but will only have to reduce the bottom slowest velocity SKUs temporarily, which will leave about a half dozen flavors. The bad news, though, is that there are limitations on labor at the contract manufacturing side, and there is Tetra Pak packaging constraints that are adding to the supply chain challenges. This is making trade inventories too low, which is leading to kind of out of stocks in the marketplace that will likely last several future quarters. Now, they will be adding capacity to kind of have a 5-year plan that is a three-prong approach. The first one is adding capacity to their existing co-manufacturing network that is securing more line time, but also building additional lines that will show up incrementally each quarter over the next few years. They'll also be expanding their co-manufacturing network. I think currently they have about 5 locations, but in the next 5 years, that's expected to double to 10 locations. And then, thirdly, of the kind of 5 co manufacturing locations, BellRing Brands does have one dedicated facility that helps them with increased control. But taking this kind of one step further, BellRing Brands and Post Holdings have entered into an agreement in which Post Holdings will purchase and develop land with the intent to build an aseptic processing facility to produce RTD shakes for BellRing Brands. BellRing Brands and Post Holdings are expected to enter into a contract manufacturing agreement. This facility will be a portion of its total supply, but BellRing Brands will continue to deploy an asset light business model that focuses on the diversification of manufacturing locations throughout the country. But I hope you guys enjoyed this YouTube video. If you did, consider hitting that like button to support me. Also, help me get to my short term goal of getting to 2,000 subscribers very soon by hitting that subscribe button. I'd love to see you join me on this journey, but we need to fix the fact that slightly less than 70% of you that are watching this right now are not subscribed to my channel, and that makes me extremely sad. But thank you again for tuning in, and I'll see you on the next one.